Hello, everyone. I hope you are doing well. So let's go for the weekly review of the end of April. So this has been a tricky week, but very interesting in terms of setups. So let's start on the Monday, 24th. I hope you still caught some good trade this week. Okay. And I hope you didn't lose your account on Wednesday. So Monday, the power of 3. So how do we put this? Yeah, okay, like this. Monday, power 3. So we start with the hourly trade screenshots. So we wanted at least a pullback inside this zone. In my previous daily view, daily bias. So you will see I was wrong about some, predictions. And that's why I don't like to do predictions. I try to avoid doing it, and I try to start the day fresh, with a fresh view, no bias in mind. And you will see why this week. We have a perfect example. So if you go on the screen, you can see clearly that people must be selling in this range, from high to low, in this like internal range. And so the stop losses are above right there, okay, in this zone. So no matter your bias, on the daily or whatever, your bias, I mean, the liquidity is sitting above this, in this blue area or above or whatever, okay? Where are the stop losses, so the direction for now in this range, inside this range, okay, where is your target? It's right there, okay? Now, how do we trade knowing the direction? We need to know the second point of our strategy is to see if we are in a good place to trade. If there is inducements, you must look at the order flow, etc. Because remember, even though you might have the right direction, you might have the wrong entry, okay? Because the algorithm, it's tricky. You will see this week it was very tricky. Okay. So now let's go into the 5 minute. And you will see the power of 3. So first, we induced. So we start at 8, somewhere right there. And so we first induce people to buy with the small BOS. And remember, our bias is buy, okay? I mean, in this range, okay? And so we don't want to sell, okay? We want to buy. But if they induce people to buy, it means that we don't want to buy from this range, okay? We want inducements to be for sellers to buy. You know what I mean? You want stop losses to be right there. And therefore, second point, boom, we take buyer stop losses, the people who bought inside this range. Okay, we take the sell side liquidity, and if you take this range from low to high, continuing, in this, going into this target, you can, the only time I trade within the range like this, going with the range and not against the range, it's when I know the direction is external range liquidity. And therefore now, and inside, you have inducements for sell. So this range is not clear for everyone, it's not like, boom, this range is straight, most people will sell, okay? Here, it's not straight because you have like complex pullback, or I don't know what you call it, but some people will think this is the low of the range and this is the high, boom. Therefore, now they are selling, okay, because we are inside a 1 hour or 15-minute order block for sellers, okay, and people are looking for sales. Here you have a little order block below the 50%, or you could use the fair value gap and say this is short-term low, this becomes intermediate term low, and boom, okay? So now, first is accumulation of buys. Second is manipulation, and third is distribution, okay? So we have taken sell-side liquidity and went into discount pricing. This is what I was talking about, when I was referring to the second point. Even though you know the direction, you need to trade from the right place. So you must look for discount pricing. And also we have induced sellers to sell. So we have generated more buy-side liquidity. Okay, right there. We induce sellers to sell with this BOS, more stop losses above. We can now target the buy-side liquidity, both liquidities. So now the third point is to find to wait for a shift in market structure. So here is a very clear shift in market structure. So boom, we went straight above. Here we had like a bearish order flow, okay? And I like the breaker in this type of cases because we should be retesting this little order block on the downside, but we just went through. Therefore, I use it as like a discount pricing, breaker plus fair value gap. Breaker plus inside this fair value gap, which created displacement, BOS, SMS, whatever what you want to call it, doesn't matter. So this was a live entry, stop loss below, and I also took a second entry live, okay, in this little fair value gap, and then I took some partials. No, I didn't take partials. I took full profits right there. And it went a lot more upside after that. But it didn't matter to me because it was more than 1%. And I had two entries. Even though the second one is half position, it still, made more than 1%. Day is done. See you tomorrow. The thing is, I could like put sometimes I trail my stop loss, etc. My stop loss, it becomes a stop win, after. But you need to, not be so greedy, because if you get greedy, you can make like, let's say 5% in one trade. But then the next day you will be greedy also, and the day after, etc. And you will start developing wrong habits. And therefore, you will get many break-evens and I would say many losses because your appetite is not satisfied with break-even trades. So you will force trading to get into winners, and boom, stop loss. This is how it happens. So you need to listen to your emotions and when you see that you are being greedy, you just stop and you take your profits, okay? Don't for the day. Always watch your emotions. So that's it for the Monday. Okay, pretty easy, I would say, compared to the day afterwards. So now let's see Tuesday. Tuesday. So here I was wrong about my daily bias, okay? That's why it was a back test and not a live trade, because I completely missed the trade. Where are we? Ah, no, it was Wednesday. So Tuesday, Tuesday. Okay, I was still in my bias of sell, the triple, the free push before reversal. So you remember this was the buy side liquidity that we took on Monday, sorry. Okay. So now Tuesday we went into this area. Okay, we are in like premium pricing, so we want to sell. Last point of sell, okay. SMS already happened during Asia. And therefore, I wanted to sell, and I think I sold, to be honest. So I don't know why I put backtest in this one. I sold and I put my stop loss above the intermediate term high. Okay, so I sold really grossly, if you can say like this, because we had this BOS. I sold at the opening right there, stop loss above, because it was like a tight stop loss, 6 pips, something like this. So I didn't want to put my stop there because maybe it will do a W kind of thing, which it did. And why did I trade like this? Because I don't know why I didn't mark it, but we had like the New York opening right there, somewhere inside here. And I knew the direction was down. We are like in a kind of bullish range. We retested this order block. Okay. I like this order block because this one induced people to buy. Okay, inside this one with the green candle, and then boom, we took the liquidity. Here you have internal liquidity and the New York opening. We take the liquidity above New York opening, and then boom, shift in market structure. So this is the structure from high to low. You can either sell in this fair value gap or wait for a BOS, and which we will see later, the entries, And sorry. So this is the 5 minute. So now you can say you have a double BOS, plus following the order flow, And now we have a free BO. That's why, yeah, now I remember. That's why, I sold grossly because it was very tricky to enter this trade. And I know when it's continuing down, it's hard to explain like this, but it's an inside feeling, usually I wait for 1 minute price action, etc. But my experience, I would say it's experience, inner knowing, direct knowing, inspiration, intuition, okay, told me to sell in the 5 minute, put my stop loss above the what I call intermediate term high, because I knew here it was safe, and then just let it do what it wants until we break, of course, this area. Okay. And now you will see why I did that and why this is very important to listen to your inner intuition. But not you have like two voices inside, you have the voices from, bad feelings, emotion, like FOMO, revenge trading, all this ego, Yeah, two voices. You have the voices of ego and you have the voices of intuition. But a real intuition, it's clear, it's a silent voice, it's a relaxing voice, while the voice of ego is very impulsive. It's very emotional, very impulsive, and it's bad inside. What you are doing is bad, you are doing something wrong. It feels wrong inside, even though on the paper it can feel right. So it's very important what I'm telling you right now. So here you have the free BOS type, and this is how they fuck everyone. Sorry for the word. With internal liquidity, and that's why you must always be very careful with your stop loss placement. Very careful. When you place your stop, you must feel your stop to be at a safe place. Okay? When I put my stop above this intermediate term high, for me, it's a safe place. And you see, it's not a lot of pips, 5 pips, you know, if you trade from this BOS. And it's a safe place because I know if we go above this point, it means my plan was wrong. I was wrong. I accept it. No problem. However, I would be very angry to take a stop loss right there. Or let's say you wait for some internal shift. You trade from, I don't know, you trade from there, you put break even, you take break even. Or if you trade from this order block or this one, you put your stop loss there, boom, they take your stop and then straight down. It happens a lot. It happens a lot. That's why I always try to mark the intermediate term high, because this is a place where your stop loss should be safe. And then if you are wrong, it means it was not an intermediate term high or wrong direction. Okay. So sorry, maybe I'm speaking a lot today because it was a tricky week, but a week where you can learn many lessons, which I'm trying to give you, you know, lessons which I hope will make you avoid taking more losses like this, okay? So let's say you wait for the 1 minute price action, okay? You wait for a BOS, and then you wait for a shift in market structure, which happened there, but here you can see there's something wrong because you BOS again there. What does it mean? It means that if you now want to sell, because here there was no entry, here no entry before the BOS, okay? Now the problem is that the range is from there to there, so people will sell there and they will sell there, okay? So what will they do? They will induce people to sell from one of these two order blocks, but giving you another BOS down, like this one, okay? So now what you will do is to sell from there, and they did a second BOS. Some people will even sell from this order block. You have two order blocks, okay? And you have people, of course, which will buy from there, okay? Boom, BOS, third BOS, okay? This was the second, and the first one, we can count this as the first one because it is this order block which, boom, took the structure point, and then we formed internal liquidity, okay? Second BOS confirmation from the order block, and third BOS from this little order block and this little range, okay? And from the third BOS, you can snipe it. It's easier, even though it's hard mentally. You know this is like intermediate term high. And if you are not sure that this is intermediate term high, you can put it still above this one, okay? From there, 5 pips only. And boom, straight away you have 20 pips. Look, 55, 1.10 to 55, 1.10, 35. 9 a.m., they done. Okay? Your percent is done. Then, after a percent is done, if you have missed it, you have a 1 hour fair value gap. Okay? which form and which you can trade from. And why this fair value gap is important? Because look at the 1 hour order flow. Boom. Here you have the last order block, which made the BOS. We induce people to buy with this green candle close. And instead of buying, boom, they create a sell with displacement fair value gap. Okay. So this is a very important fair value gap because it is a displacement fair value gap. It is the one responsible for the shift in market structure in 1 hour. And they induce more people to buy inside this order block with a green candle close to here. Okay. Boom, retest of the fair value gap. So this is it. This is the 1 hour fair value gap. They take the people who sold right there. They take the liquidity. So you remember 9 a.m. boom, 35. Where is 35? Somewhere there. Okay. So let's say for the early sellers, those who sniped, your day is done here. Okay. But for those who missed the trade, you must have waited until 11 until this liquidity is taken, retest of the 1 hour fair value gap, and here you can have many entries. So if you are very confident in your area, you can use the most powerful shift in market structure entry, which you can find in my videos, educational trading videos. And this fair value gap, if you remember, you take the last order block, which took the liquidity, very clean and clear order block. There is a little fair value gap. You wait for a retest. Boom, retest of the fair value gap, you sell from there. Stop loss above. Or you can wait for a classic shift. So you say this is the swing low, which needs to be taken for a shift in market structure, because this is the swing low which is responsible for taking the buy side liquidity. Okay, so this low must be taken. It is taken with a nice fair value gap in 1 minute, very strong. So you can trade from there, entry after swing low, shift in market structure, entry there, stop loss above to be safe. And you see all the price action which happened inside this fair value gap, but every close, every candle close has been inside. Okay, it's respecting this 1 hour fair value gap. So you sell from there and boom, boom, and then TP. Okay. So this was Tuesday. Okay. Now let's go into Wednesday. The lose your account in a day setup. I love this setup. I used to hate it because I used to burn my accounts with this type of days, but now I love them. So the scenario is when it goes so much up like this, and you will see what I'm talking about. So you see, boom, very up, 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 up. Starting at the low of a range, it is very probable that it will go much more up because it will leave you no entries, no retest or off order blocks or whatever. Like it goes up and goes up and goes up and goes up. But there will be a time where it will induce some people to sell at some order blocks level. And this is where you can catch the buy and ride with it, you know? And so on the daily, I was wrong about the daily bias. Here we come. You remember I told you 3 buys, 3 runs before we target at least the sell side. And I forced the order block because I used a 2 days order block. Because if you take the daily order block, which is the case now, okay, you see that it did not retest the daily order block, which means this was liquidity. And therefore, you see the fact that I did not, I was so anchored, in my bias, in my opinion, that it needs to go down, and therefore I missed the trade. I saw it. I will be very honest. I saw it. I called it, but I didn't take it because my bias was sell. It's very stupid, but this is how your ego gets caught, in negative self, talk and self analysis. So 8 a.m., you see we just made a BOS, and you see this little range that no one pays attention to. What they pay attention is that we have made a BOS. We have one very clear order block right there, and the second one, and you will see in the 15-minute or the 5-minute is even more clear. Yeah, that's why I like to start every day with a fresh mind, because when I have a bias in mind, very often I miss good trades or force in the wrong direction. So in the hourly, as you can see, we have made the BOS, and now the stop loss are above. Okay. Now 15-minute, yeah, we have hit the TP. I don't know why I have put the 15-minute right there, but doesn't matter. Now the entry, yeah, I remember why. Because on the 15-minute, you have this very clear order block. People will want to sell from there, okay? Here in this one, we didn't get enough price action for a buy. However, in this one, we got enough reaction for a buy, okay? And my entry was there, very tight stop loss, very big TP. But of course, this is a back test entry. This is not this. I would say live test because I saw it live, but didn't act on it. But yeah, just to let you know. So this is the only price action you see from starting from 8. This is the 1 minute. You see up, 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 up. Here, no BOS from there. It was inside an OB, but nothing clear to buy. You could say this is like intermediate term low, short-term low, or short-term low, etc. But, I don't want to play such games. I want things to be clear. And here you could say this is a clear little BOS, and we start having like a bearish order flow. After this big push, you take Fibonacci, you take the first fair value gap before below 0.5, which is this little one. Okay, you wait for a retest inside this one or lower, doesn't matter, but it's better from there, because lower, it means people will start to buy, inside this kind of order blocks. It's better when it does not mitigate an order block, especially when there is an order flow like this. So here, boom, we retest this little fair value gap. You wait for another fair value gap to be formed on the bullish side. We formed a little fair value gap. You can trade right from there, or you wait for a clear shift, but you don't need to wait for a shift when you are already in such momentum. The momentum is already going, so you don't need to wait for many things, just for a kind of inducement on the sell side. Okay, so first point, inducements. Second point, you trade from the right place, discount pricing, fair value gap. And yeah, that's it. Yeah, third point is the fair value gap. Okay. You could enter also from there. Okay. You could enter from this fair value gap. Very nice. I like when they are big and they break the structure. So you see here, we didn't retest this order block. You could trade from this one, but people, are selling. They are not buying here. And here again, boom. So pretty clean. And this is why I call it the lose your account in a day setup, because you will try to sell every bearish order block. So here on the left, I believe there was an order block. There is little price action. Boom. It takes your stop loss. You try on the next very beautiful order block on the left. Little price action, even though there is no BOS, some people, they try to sell anyway. Boom. Second stop loss. Now you have very clear bearish move. You can sell. Boom. They take your stop loss. Boom. Stop loss again. Here, another very nice break. And, they make you wait inside this range, induce people to sell. This is also a very good place to buy, because here, you see, we take the highs. People will buy from there. Boom, you take the sell side liquidity. People are now selling. Okay, you have this beautiful range from high to low. People are saying right there and right there. Boom, shift in market structure. You buy and it continues. And then again, of course, induce more people. This is even better, because the problem here is we went into this order block and people must be buying from there. So this is liquidity, internal liquidity. You have the first push, they form liquidity inside, boom. And here we can trade from here. It's better because now people are selling. They are not interested to buy from there. Okay, and you can continue and buy and buy and buy. So people get trapped. And the only trap for buyers, I would say, yeah, maybe this one, but I don't think many people would buy right away from there. But yeah, this one is a good trap. This is a good trap, okay? So, yeah, this was Wednesday or Thursday? Wednesday. Thursday, daily reversal. Finally, on the daily, yeah, we get into this daily order block, finally. Now we can say that we can target right there, because even though this is buy-side liquidity, they need to induce people to sell, and they need to take some sell-side liquidity also. And therefore, I was into a bias of sell, but for the right reasons this time, because we just took the buy-side liquidity and we made a BOS, and we have a beautiful range. So what is this setup? This setup is accumulation plus new range. So you have an accumulation of buys from yesterday evening, buys, boom, like a clear BOS and a new range, because you have two beautiful order block and a beautiful range in the 15-minute, which people will try to buy into, okay? So let's go zoom in into that range. So the sell side, the minimum TP is the sell side liquidity. I mean, the first TP could be this low, but it's very tight. So at least aim for this low, you know. So it needs to make at least 20 pips TP, okay. So let's zoom in. This was very tricky entry. So we start at 8, and you see we are going down. So when we start going down like this, directly, you know, for me there is something wrong. Even though I want to sell inside this range, I don't want to sell so easily, you know. The only times I sell easily is when, like Tuesday, I think it was, when we trap before 8 opening, you know, we trap the New York Open, you know, you can sell straight from it. But yeah, I will show you because probably you don't get what I tell you. So sorry, I don't see if Tuesday. Okay. So Tuesday, yeah. Tuesday we induce people. So we already made the manipulation, you know, above New York Open and boom. And here again we made BOS. Okay, so the inducement is still up. However, for sell it's good. However, here um, the inducement was, even though we had this BOS, before 8 we started like shifting the structure down, you know. And then if you zoom in, you see this is an intermediate term low type of shift in market structure. If you don't know what I'm talking about, please refer to the video on my YouTube channel. I think it's called very objective, easy and objective, or objective and powerful shift in market structure. So intermediate term low, short term low, boom, we break. If you remember, what I do is I put the Fibo on the first swing low after the break, and I take anything above 0.5. Here it's liquidity. So I would sell right above this liquidity. Stop loss above. And here, if I did that, which I did not, because my bias, sorry. No, this time my bias was good, but yeah, this was not clear for me. I remember my entry. I will tell you about after. Yeah, I did not snipe it, but this was a good entry sniping, okay? And boom, but afterwards you see you come back. Here, even though we have like little retest of the fair value gaps, it's pretty straight. So for me, these are not real retest, you know, of fair value gaps. So in this case, if you didn't snipe, I would prefer to wait for something clearer, you know. And yeah, I think I sold from there. So retest, boom, fair value gap, shift in market structure. And of course, I took break even. And then again, I sold from there. Okay. From this fair value gap. But it's kind of tricky, you know. It's kind of tricky because let's say you miss this trade, you can very easily get trapped, you know. Let's say you wait for another break, you try to sell from there, boom, stop loss, you know. And stop loss again, right? If you say this is intermediate term high, you get stopped out. Okay, this was very tricky. So this became the intermediate term high, and then we went into the sell side liquidity. Yeah, I remember I took my profits there, somewhere here. I didn't wait for all this because I knew there was some news, you know. Yeah, yeah. I remember I took some profits in this area, you know, just before the sell side. It was 130 something. Yeah, right there probably. Okay, does not matter anyway. And on Friday, I took a stop loss. So to be honest, I didn't, up to today, I didn't understand why I took this stop loss. I still don't understand, but well, sometimes it happens. You cannot understand every price move. So my bias was sell again, you know, because we took the buy side liquidity on the daily. So this is the 1 hour, of course, but now we target the sell side liquidity, okay, on the hourly. And on the 5 minute, we have a very clean range, low to high. So for me, the liquidity, it was clear. Their direction, sell, of course, because you have this beautiful order block people will buy from, especially we get a BOS after the 8th opening. And on the 1 minute, something else happens. So the BOS was there. You could have an entry from this fair value gap, but then you get stopped out either at break even or stop loss if you didn't put break even. Very fast, you see, very fast. I took break even, I think, from there. And what happens is we didn't take the stop loss, okay? However, as you can see, we took all the liquidity inside, okay, on the sell side and on the buy side. Okay, this didn't go above. We just cleared all the liquidity. And now what happens? Now that we have cleared all the liquidity, if you saw this setup before it happens, you could trade right from above the liquidity. So right from this area, somewhere there, okay? You could snipe it. As you can see, snipe were very efficient this week. Almost every day it was better entries than waiting for anything else, any other shift. And otherwise, if you missed the snipe, let's see how we can still enter. Because if you remember, the target is the sell side liquidity. Even though we took these stop losses, it's not the end, you know, it's not the end. The end, so I believe the stop losses were there. There was still room, you know, for TP and for taking another trade, you know. And therefore, in the 5 minute, we have a beautiful breaker, which I wanted to snipe into, but I don't know why. Probably because, you know, I rarely put the stop loss above the breaker. I put the stop loss above the range, and the range was very big. So the breaker was there in the 5 minute, so I wouldn't put a stop that big. So I was like, okay, let's see if we get some price action inside the breaker and find an entry. So I saw this little push up with imbalance pretty clear, you know, we rebalance, we push, and then boom, shift in market structure. And for me, it was clear sell, you know, nothing wrong. So I sold from the fair value gap and it took me out stop loss. I had some reaction, but this is where you need to monitor your trade, but because let's follow the price action. Here, it was a shift in market structure. So this was true. And we are following the order flow. Okay. However, now we retest again this order block and we did not break below. What we did instead is we broke above, you know, and therefore there is another shift in market structure. But you know, it shifts again right there. So you can have many shifts. So to be honest, I don't regret this stop loss. It was clear. For me, it was clear. It was following my plan, etc. So sometimes you have to take some stop losses. It happens. Okay. I tried to find a reason, but I could not find any reason. I mean, there was no higher time frame fair value gaps above or anything else. Okay. It was just doing its thing, you know, probably inducing some sellers and then inducing some buyers just to trick you, you know. But yeah, what I could do is I could sell from the breaker and put my stop loss just above also, you know. And yeah, again, shift in market structure. And here again, I make a trap. So this is a good trap. How we can see it's a good trap. It's forming like a little range, a beautiful wick, you know, it's pure liquidity. For when my eyes see this wick inside this range, for me, it's money, you know, it's stop loss. I see stop losses above. For me, it's pretty clear. And how? You know, it's not a good trade to sell from there because when you measure, so you say this is intermediate term high, you measure from high to low, 50%, it happens around there. And the first fair value gap above is this one. So this one is liquidity, this is liquidity, 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 boom. Finally, we are at a good place for sell. Okay, you remember, first point is the direction. Even though you got the right direction, you might not trade from the right place. This is the right place to trade from. Third point, you wait for a shift in market structure, or in this case, you can wait just for fair value gap. It's enough because it's a trend following trade. And you could trade right from there, or you could clearly snipe, you know, from there, stop loss above intermediate term high. If you really don't want to stress your mind, you know, you just put your order right there, stop loss above, and you let the market do its thing. But if you want to be precise and, you know, and wait for confirmation, etc., you wait for a little fair value gap, trade from there, stop loss above, and you follow until this is taken. Of course, here you have a new spike. This is not good, but you have to do it. That's why I trade. EU is good to trade in the morning, London session, because you rarely have news, you know. It's only in the afternoon, and I don't like to trade with news because it does some spike, and I don't like. And sometimes with FTMO, it's forbidden, and you know, you cannot even take break even. Or so, yeah, I trade like this. It's good for me. So that's it for this week. I hope you got some clear insights. And remember this lose your account in a day setup. Remember this one. Because you can really, I lost an account, not only one, many accounts back in the days, trading in the wrong direction, trying to sell from this order block or this one or this one, this one. They give you plenty, you know. Generally, when you have plenty of choices in the market, it's not good. It's not a good setup. A good setup is when you have no other choices. For me, this is a perfect setup. You have no other choices. And it happens not every day, but very often you have setups where there is no other choice in terms of liquidity, you know. For example, the free BOS style, when you have so much inducements in one side, you have no other choices to trade than trading against, you know, the BOSs. So that's it for today. It was quite long, but very informative and educational. And do not forget to leave some comments and reviews and whatever you want. If you learn something new and motivates me to continue, of course. Um, and yeah, I wish you a good start of trading week and month next week. It's the week of May, the month of May. And yeah, enjoy your weekend and see you next week, next Sunday. Trade safe, trade mindlessly.